All right. See if this thing starts streaming. We can rock and roll. As soon as it starts going, we will ready. Let this thing rip. All right, cool. Let's see who's here today. Make sure I post that. Get that out. Come back over here. Make sure this is all working. All right, cool. Looks like people are coming in. Terrific. What's up, everybody? How you doing? All right, great. What's up? All right, guys, as you roll in, say what's up. It's always great to see you all. And yeah, just living. It's always a win. So you guys, as you roll in, make sure you say what's up. Drop a line right or drop a note right in that chat box. Name, maybe where you're coming from, how you doing. It's Sunday on the West Coast, Pacific time. And yeah, great times. I figured it's Sunday. I'm trying to do more videos on the weekends, especially. I'm trying to get the consistency going. And I didn't have a whole lot prepared, so I figured why not let's just go live and go through a few things in the market. Do a little bit of an overview, a couple of pieces of news that might be interesting, but honestly, I just kind of want to just see what you guys are up to, a time for you guys to ask any questions. This probably won't be one of the hour and a half live streams, but I think it is just kind of a cool thing that we can do this, so we can hang out and talk and, maybe kill some time on a Sunday. So why not? So appreciate you guys all coming in. I know it's kind of last minute impromptu, but why not, right? So we got Jordan from Vegas. What's up, Jordan? Nathan's from England. Very cool. I love it. I love how international this is. Cool. So thank you guys again for coming. If you are not a subscriber, make sure you hit the subscribe button and the notification bell for notifications for these sort of things and for daily videos. If you are a subscriber, hit that thumbs up button. Let's rock this out. And good stuff. So we got a good thing going on this week. So let's look at Bitcoin real quick. And what we'll do, guys, we'll kind of pop around, right? So we'll look a little bit at the price, a little bit at the charts, go back, get a couple questions, jump around. This won't be as much of like a daily video. It's just kind of, a little bit of a hangout. So we're looking at the 1 hour, right? Obviously you guys can see all this, which is nice. And you can see that we're seeing a lot of this chop, right? And some would say that we're going through what is considered a head and shoulders pattern where this would complete itself down right here. We will obviously see what happens in that case. But overall, as has been the theme for the last, I would say, week and a half, 2 weeks, it's really a wait and see game. And I know it's like the most boring, unfun, uncool, sexy thing to say, but that's honestly what I've been doing. Setting some really, really low bids across the board on some of the coins I'm looking at, which we'll obviously talk about. Picked up a little bit of Litecoin, a little bit of Bitcoin down on this bottom right here, but I'm just waiting. And so just kind of doing the boring stuff that you always do in the chop. Now you can see I'm over on the log scale back again. Previously this week, I was doing a little bit without the log. So if you unclick that, you can see how it's a lot more severe. Log chart, obviously, it normalizes all the gains. So it goes in percentage gains, not in raw number gains. And this yellow line represents what would be the next major floor if this did, in fact, become a bearish drawdown. This is where the next big level of, like catastrophic level of support would come in. Below that, then you get really creative about how you get your money. So we're just going to keep it from there. Again, this is, what happens. And I think this is an ongoing theme is like patience kind of finds a unique way into how the market will extract money from different people. And this is a good example. Now, it's different having patience in this kind of a market than when you're over here. Having patience when things are going up is really hard because FOMO, in my opinion, is the most powerful force in the universe for human beings. I think that it's insane. When it's a bear market, I think that there's a little bit more discipline, especially if you've been around for a couple of months. But one thing I can tell you from my own experience, having been in crypto for a couple of years now, the deals that are going to do really well for you and for me they will come. And the more you try to hunt them down, the more it's less like a home run. Like the probability goes down the more you kind of have to seek it out. So wait for a lot of these deals to come and just tee themselves up right in front of you, whether it be on a big drawdown on the big coins, whether it be a big drawdown on some of these smaller coins or your favorite altcoins, or you get a great deal on an ICO or something. Wait for the good stuff. Wait for the good deals. It is a very, very good practice to get into. Anyway, that's where we're at. So I personally think that this is going to keep dipping down a little bit. I think that the volume is dying. I think that this could be a really interesting week. I believe Chinese New Year is ending this week. Correct me if I'm wrong. Maybe it's the 18th. I'm not entirely sure what the date is, but there should be some, like any week in crypto, we'll see some new things happening this week. But you know, stuff like this. So, I mean, this news thing came out. Arizona, their Senate passes a bill to allow tax payments of Bitcoin, not just Bitcoin, like any cryptocurrency that they deem credible. So it could end up being a lot of different stuff. This still needs to pass the House and the state. But what's really good about this is that the legitimacy of it. And Arizona did this mostly because they want to establish themselves as a blockchain center. It's a great way to become a hub of thing. Like Pittsburgh did this for technology maybe 5 or 6 years ago. They made a huge push to try to bring tech in, and it kind of worked, right? Cuban's a big proponent. He's from Pittsburgh. He tried to do that. Arizona sees the same thing with blockchain. That's what's so unique about this market, because this obviously happens on the federal level with countries, but we may see it on the state level too. So this just, it helps a lot with legitimizing it. It's hard as somebody who's skeptical of crypto to look at something that the government is now accepting for tax payments and totally write it off. I mean, you can still be skeptical and hate on it and do whatever haters do, but it adds more momentum to the whole movement. So stuff like that. I think that we're going to start to see some more news that comes out like this over the coming weeks. And hopefully that gives us enough momentum for a new push that can really, in my opinion, we really need the momentum so that whenever regulation comes back, whenever, in that Senate hearing, when they said, hey, well, we got to go out, figure this out, and then we'll come back to the Senate Advisory Council or whatever and provide our opinion or whatever you want to call it. Before that happens, like, we really want to have a lot of momentum in the market so that whatever it is, it doesn't totally smash the juice that we're getting. So that's from a macro, I guess, top level standpoint. That's really what we want to happen. And macro starts with micro. It's just a collection of massive amounts of decisions. So we can all do that. Get your friends educated, get your friends excited about crypto. All right, let's take a few questions, guys. So if you have any questions, feel free to pop them in. If you anything you guys want, obviously, the better the question, the more likely I'm going to answer. If you say anything obnoxious or offensive, you're going in the ban pool pretty hard. I like doing that. So keep it above the belt, guys. We're all friends here, right? All right, let's see. What do we got here? Philip asks, Block V, at your last meetup, you saw Reeve Collins, right? Any good info? Yeah, he was I was at a dinner with him a couple of months ago, and then he was in LA at that event I was at. Block V is super interesting. I own some Block V, obviously, full disclosure. I was not part of the ICO. I just bought a market exchange. But it's really interesting in the sense that it's a blend of like B2B and B2C, right? So overall, I think you got protocol, you got B2B, and you got B2C products that are going to come out of the blockchain. And there's a lot of confusion because people are trying to create B2C dApps that the way that you would do it for maybe even a startup, like a tech startup, traditional company. I don't know if that's really going to work because that's a lot of there's a lot of factors in that. If you can find a way to create partnerships through B2B that can then do the marketing and or the distribution, will that be a super long-term model? Potentially, but I really like it because it's a compelling pitch to companies and to brands and to things like that because they want to get into blockchain, and it's very difficult for them to actually build their own coins. And so BlockFi in many ways provides the ability to blend the brand world, the blockchain virtual currency world. And if you don't know anything about BlockFi, you should go check it out. Go do your own research. I have no idea what the future holds for them, positive or negative, but I do think that it's an interesting hedge, and I do think that they have some really smart people on their team that have really good partnerships, and that alone can drive the price up. So that's what I would say about it, right? Okay, let's see here. Jason asks, what are your thoughts on the future of decentralized exchanges in light of increased regulatory involvement coming from SEC? Great question, Jason. In fact, this is one of the things that I want to talk about a lot. And I think that, or at least this is my theory. All right. And I'm going to pull up 0x here. I obviously am a fan of 0x. I'm an owner of, I'm into 0x. I dig it. I dig their team. But I'm just bringing it up just to keep the topic. Here's what the narrative on decentralized exchanges are. Right now, there's Coinbase, there's Gemini, there's Binance, there's KuCoin, there's Bittrex. There's all these centralized exchanges, and they get hacked, or they get DDoS, or all these like bad things are happening to these centralized exchanges all the time. They're also Jordan, to your question, they're also very much an easy target, or a clear target, I should say, for regulators, SEC, CFTC, anyone, right? FINRA. And so the idea being something like ZRX or AirSwap or Kyber or any of the decentralized exchanges, OMG to a certain extent, will replace those centralized exchanges. That's what like the promise has kind of been, protocol level aside. Now, they're doing that by creating things like, like Radar Relay, right? So if you go to Radar Relay, this is an example where you can trade, and it's like a decentralized exchange, and you can go check it out. I personally am not convinced that that is going to be the use case of decentralized exchanges anytime soon. And the reason why is because of liquidity. Meaning there's just not going to, like, it's hard to get enough inventory in there on the buying and selling side to make it a viable market if you want to buy and sell a good amount of whatever coin you're working with. I think, too, there's no support on decentralized exchanges. If you can't figure out how to sign up, or if you have a problem, you can't email anybody. There's no support team. And maybe that could change. Radar Relay or any of these decentralized exchanges could eventually become companies that are built on decentralized protocols that have a support system, but then you're kind of centralizing the company, which is fine. I mean, that's how most blockchain companies are built anyway. But there's always these like, you can win over here, but you got to lose over here. There's trade-offs. So that's what's happening. That's what people are thinking about with decentralized exchanges. What I think about the big win of decentralized exchanges is much more similar to the idea behind something like an atomic swap. Now, decentralized exchanges could do the same thing, so to speak, especially with the ERC20 tokens on something like 0x or Kyber, AirSwap, or any of these Ethereum-based ones. But they're just not there yet, mostly because the network can't scale that fast. What this means is that you can get instant exchanges done anywhere through any app instantly. Meaning, let's do a real world example. Let's say I went to Starbucks, and let's say Starbucks accepts Litecoin, but I have Ethereum on my wallet or on my phone, and they accept Litecoin. Now, traditionally, you couldn't do that. I mean, it couldn't exchange with each other. However, if there is a protocol layer between these two that could instantly exchange the two in real time, so that I could take Ethereum and send it to them, and in real time and exchange into Litecoin through the app, that gets interesting. That's what atomic swaps can do, but there's only so many atomic swaps. But that's what these decentralized exchanges may be able to solve. And if they can solve that, that becomes a huge connector in the ecosystem, right? The same way oracles work in the B2B with APIs and all that sort of thing. Decentralized exchanges become oracles for consumer applications for transfer of payment. So the argument of, oh, everybody's got to own Bitcoin, or everybody's got to own Litecoin, or everybody's got to own Stellar or Ripple or whatever the coin is, that becomes a moot point. Decentralized exchanges solve that problem because they can instantly exchange one token for another in real time, so that the entire ecosystem glues together and can grow. Now, this is obviously a huge idea. We're pretty far away from that, sort of for obvious reasons, for platform, for protocol reasons, especially. But as soon as one of these big protocols starts to win, or a few of them start to win, you start to see decentralized exchanges pop up on all of these. It's not about liquidity. It's not the same way. It's not like a Binance replacement. It's a way to interact with other applications that are built with different tokens. So that was kind of it's maybe a long-winded answer, but that's, in my opinion, that's what the future is. That's what it has to be, because none of these, no coin will be the dominant coin that everybody uses. There's going to be specific coins that solve specific problems for specific markets. And there's going to be connectors. So I think that's an interesting, that leads into an interesting investment thesis, which I've been thinking about and working on this idea a lot, is what are going to be the connector protocols for crypto, for the crypto world. And, that's when you get into your research. You look at things like decentralized exchanges might be able to do it. Some of these different coins have the ability to do this kind of indirectly. You've got things that do it for B2B, like a Chainlink or an ARC can do this. But Komodo's got an interesting decentralized exchange. That's what I believe the real win is going to be. Because you get that. I mean, think about the transaction volume on that. It's going to be insane. All right, so let's pull up this. This was kind of interesting. So this guy, Joseph Young, he's really interesting Twitter account. You should go check him out. I am Joseph Young on Twitter. He retweeted a Zero Hedge JP Morgan executive summary, which, so it looked like this was an internal summary. And basically what they talked about was, for technology, cryptocurrencies are the face of an innovative maelstrom around the blockchain technology that is bringing both massive price volatility, constant trial and error of new product. Cryptocurrencies are unlikely to disappear completely and could easily survive in varying forms and shapes among players who desire greater decentralization, peer-to-peer networks, and anonymity. Now, what's the real juice of this? The underlying technology for cryptocurrencies could have the greatest application in areas where current payment systems are slow, such as across borders, as payment, as reward tokens, or funding systems for other blockchain innovations and the Internet of Things, as well as parts of the underground economy. This isn't that new, but it's important to know that this is the narrative that a lot of people are seeing as the potential winners in cryptocurrency. So if you want a fun Sunday project, what you can do is go to see this tweet. You check it out. It's on Zero Hedge, or you go to I am Joseph Young, check it out, and look through CoinMarketCap and find the coins that do cross-border payments. Find some coins that do reward tokens. Find the ones that fund systems for blockchain innovation. Find ones that are all about Internet of Things. Put them in a spreadsheet. Do your research. Which one of those do you think is going to win, right? Which one do you think has the best chance? Which has got the biggest network? Excuse me. Who's got the best tech? Who's got the best team? Who's got the best strategy, roadmap? But that's a really good way to start to get breadcrumbs to start your journey down. Because if this is what the narrative looks like, that's where they're going to start looking too. And that's where innovation will start. And that's typically how trends begin, is that someone just decides these are the industries that are going to work. These are the problems that are most easily solved now, and go from there. So I thought that was super interesting. I'm not 100%. I mean, I'm assuming this was done. I got some friends at JP Morgan. I'm going to hit them up today. All right, let's see. Stella asks, daily, weekly, or monthly dollar cost average? It's a great question, Stella. It's something that people ask a lot, so I'm glad you asked that. One, it comes down to how much cash you have, or how much fiat you have, or whatever it is. Because you want to give yourself, you don't want to burn through it nearly quickly enough. It also depends on if you're going up or if you're going down, right? A bull trend or a bear trend. So when we were going up, and all the trend lines were obviously going up, and it made sense to do dollar cost averaging closer together. So a rule of thumb, and there's no exact number on this, but the steeper you're going up, the more closely you want to dollar cost average. The less steep the slope of the line is, the further apart. And then you can decide what works for you. If you want some guidelines on this, I have a free PDF. Go to coinmastery.com/invest. There, you download it. There's a PDF. Obviously, none of this is pro advice. It's purely just, here's some options if you wanted to do it. Here's some things to think about. But that's been helpful for a lot of people. But if it's going up really, really fast, or if it's going down really, really fast, you typically want to shrink the time between, because that's just the way the math works out. Usually, as a rule of thumb, at least what I have, it's always better to put more time between your dollar cost averages. And some people would disagree with me on that, especially people that are like, oh, you're crazy, man. If I had dollar cost averaged in March and waited a month, I would have missed out on all this money. And that may be true, but when you're playing the long game, eventually you're going to get worked, right? So you want to give it's all about mitigating risk. The more time you put between it, the more risk you're mitigating. You may give up some upside on that, right? So go check out that PDF. It should give you some good stuff. All right, let's see here. Scott asks, do you use a trailing stop loss on your trades? No, I don't. One, because most of the exchanges that I use don't really have trailing stop losses, at least in crypto. You can go and find it, like in the financial world, you can find them. I mean, they're on every platform, but I don't. What I will do though is I will have, depending on how aggressive the trade is, depending on how volatile the trade, the market is, I will have an alarm. All right, so I'll take my phone and I'll set the alarm, let's say for every 2 or 3 hours. And when the alarm goes off, I will go in and I will see what the movement of that trade was. I mean, you'll potentially have a stop loss already, depending on what your trading strategy is. If everything's moved up, there's a lot of volume and it's kind of evening out and it looks like it's going to stay there, I may raise, you got to manually, change the stop loss up. And I don't trade like 90 things at once. I'm more focused. I just do one at a time. So that's just how I do it. It's a manual process, mostly because the tech isn't there. But two, it's also that's just not my focus. I don't trade as much as someone who might use that all the time. All right. Let's see here. Leonardo says, you talked about Ethereum Classic accumulation pattern. Have you seen the recent news? I talked about Ethereum Classic, maybe, what was it, like 2 weeks ago or something, when it was starting to get going. Let's pull this up on Kraken, I guess. We'll use that for now. I've been keeping up a little bit with their news, right? As far as, what Barry Silvert's talking about, what's going on with kind of the entire crypto verse that seems to go completely crazy when they start shilling it, right? Have you ever noticed, like, a lot of people that have been in the game a long time, they really like Ethereum Classic, which is, that in itself is an interesting data point to me. I think for people that are getting in, Ethereum Classic looks, relatively boring, for lack of a better word, but I don't think it is. I think that there's a lot to be said. And here's one theory I have that's really, whatever. I think I've talked about this before. Coinbase is owned, again, none of this is all complete speculation, by the way. Coinbase is a privately owned company. In 2013, they opened their doors and they raised a bunch of money in 2012 and whatever. One of the biggest investors in Coinbase is Digital Currency Group. That is owned by Barry Silbert, right? So they are firmly, they want Coinbase to produce a ton of cash. They want it to pretend, I don't know if they're going to go public or anytime soon, but they want it to go huge. So Barry Silbert, number one investor, so for the most part. Barry Silbert also owns Digital Currency Group, also one of the biggest investors in Ripple, biggest investors in Ethereum Classic, investors in Zcash, among others. I mean, there's a lot more to it, but those are the three big ones. Even more importantly, in my opinion, Ethereum Classic and Zcash have gone through somewhat of the regulatory compliance to get a OTC product built. So you guys know GBTC, you can trade that on OTC markets, which is equity markets, but you got to kind of do it through your broker. But it needs to have some level of security laws built into it, right? Some compliance and audits and everything that they talk about in the setting here. They've done that for Ethereum Classic and for Zcash. That's a big deal. I mean, Coinbase's number one thing is making sure that they are compliant. I mean, then they care about growing and everything else. So there's something brewing with Zcash, with Ethereum Classic. I have absolutely no idea what the future holds for these, except for, what Barry said about, he was like, oh, Zcash going to 50,000. Who knows? I mean, whatever. But there's a lot of talk. There's a lot of people excited about Ethereum Classic right now, from what I can tell. And people like the immutability of it. They think that there's something about the fact that it is, a more standard fork of Ethereum. And then, you can get into more conspiracy theories about that. But I don't know. I mean, look at this. I mean, this line, the current price, it kind of lines up perfectly. Look at that. Support over here, resistance over here, 3 separate resistance levels. I mean, I guess you can kind of anywhere within here, you can get a little creative. But against the Bitcoin chart on the 4-hour at least, it's been screaming up. That's a little concerning. But I mean, if it can get above this level, but like the 342,000 Satoshi level, like right around there, that's a good sign, in my opinion. BitMEX, yay or nay? That's all you. I do not trade leverage. I wish I did, but that's like one of my rules. I only play with money I can lose, and leverage is a really, really good way to start making bad decisions. Let's see here. Am I still bullish on XLM? I am very bullish on Stellar Lumens. I love Stellar Lumens. And yeah, you guys have heard me talk about Stellar Lumens. Huge fan of the cross-border payment side of it. Huge fan of the tech. Huge fan of Jed. Really like the foundation side of it, what they're doing to just the kind of vision of the company. And I like the fact that that the brand is really solid. It's just it's good people and they attract good people. That's a big deal. That makes a lot of difference. Bullish on blockchain technology. Why are you bullish on cryptocurrencies? Why do you think blockchain needs them? I don't think that. I mean, I think that the terminology is. I think one of the best and worst things that ever happened to crypto is that it was called cryptocurrency. Instead, I wish it was called crypto assets, but then nobody, it wouldn't have gotten any attention. It would have been very hard for it to get going. So from a payment standpoint, for cryptocurrencies, I think that I don't think anything is going to replace fiat currency personally. I think that may come as a downer for some maximalists, and maybe I'm wrong. I mean, who knows? But I think that currencies are just it's too big of a deal and it's also too complicated for the average person to understand it or to trust it. So that from that standpoint, now you take that down a step further. Do I believe that we can create secondary markets for crypto, where people can use it the same way they use Venmo or PayPal or these kind of Square Cash type of things? Yes, I do. I think that there could be alternatives to fiat that don't exist right now. Absolutely. But then I think that there's just ways to settle. I think cross-border payments is a great example of this. That's just data, right? And right now it's being settled using dollar amounts because that's just the easiest way to do it. It's the most kind of liquid thing. But if we had something else that was on a blockchain, but that represented value, that like a token that had the value that all the banks agreed was worth something, but it could move 100 times faster and cheaper. But there was a very clear exchange into fiat that everyone agreed on. That's when it gets interesting to me, because the governments obviously control it, or not control it, but they endorse it, they back it. It solves a huge problem of theirs, but it's acting like a currency, even though it's within their realm. That gets super interesting because it's no longer a threat to them. They can decide to stop using it or whatever it may be. So it really just depends on how it gets defined, labeled, used, branded, whatever. So let's see here. Happy Sunday. All right, happy Sunday, guys. Terrific. What books am I reading? Mike, what's up, Mike? How you doing, buddy? So I put this up, actually. If you guys ever want, I'm going to keep adding to this. You can go to coinmastery.com/store. And it's going to take you to an Amazon. So Amazon, if you have a certain number of followers, they give you an influencer account so you can make these custom stores. And I can just put up a lot of stuff that I'm interested in, right? Like obviously Red Bull for everybody, monitor I use, but mostly it's going to be books. And there's a lot of different books that I've read and am reading. I won't put books up here until I've completed them, just because you want to give like final sign off. This one, just FYI, this DVD set, you can get the streaming, but they wouldn't let me put the streaming version in here, so I just put the DVDs. I don't know if anyone still watches DVDs, but there's a Netflix version. It's just not as good. Get the History Channel one; it's better. These are really great books. I will keep adding to this list. So maybe once a month, I'll let everyone know, say, hey, I added a bunch of new books. Right now, I'm reading Principles by Ray Dalio. I'm reading a biography of Winston Churchill, which is super interesting. And there's one other thing that I was reading. No, I think those are the two right now. I'm going to try to finish those this week. If they're good, I'll put them up here. But a couple other books that I haven't put up here yet that I will. But you should go check it out. Yeah. Let's see here. Timothy from Cedar Rapids. Welcome. Thanks for joining. Russ, happy Sunday. What's up, Russ? Let's see here. Blockchain miners have to be paid, so that is a primary reason for having crypto as the upper layer on the blockchain. True. Proof of work, has clear benefits. Proof of work meaning mining, clear benefits. And I think that that's always going to be a really solid crypto asset business model. I shouldn't say it's not even a business model. It's like a money supply model. I don't think that that'll ever change. In fact, I think that that's probably going to become more valuable over time because of the decentralization. So the other one thing I always think about that may be helpful is when you think about the ultimate winner in crypto, there's fast and there's decentralized. And those are the two ends of the spectrum. And it's very, very hard to have very decentralized network, but have it be really fast just by the physics of it. I mean, the nature of the decentralized network. That's why you have things like Lightning coming out for Bitcoin, all the scaling solutions, sharding and everything else for Ethereum. And that's also why you have things like Ripple, which are very, very fast, but not decentralized. And, they're trying to figure out how to create nodes and whatever else, right? So no matter what you think about any of these coins, realize that there's different value propositions for different currencies and for different networks and ecosystems. So Lex, to your question or to your statement, I would say, I think that mining and the mining world will always be around, and there'll always be a market for it, and always be a demand for it, I should say. And that's going to be very interesting. especially as mining gets more like easier to do on the individual level, I think it's going to be really interesting. So that in itself gets decentralized as opposed to being, 50 warehouses somewhere and they own 80% of the supply. But yeah, I mean, it's a key piece of the decentralization layer. The incentive model works, the inefficiency model works, but there's different needs that don't require the decentralization. They just require the blockchain or even the hash graph of it, whether it be hash graph or a graph, a mesh technology, right? Like an IOTA or EOS or something like that. Let's see here. Slide down here. Rick from California. What's up, Rick? Let's see here. Luke, hey from South Africa. What do you think of Mike Novogratz deleting his tweet? Paraphrasing, I've been to a ton of meetings. Regulation is coming. Still bullish. He deleted this before the big dip. I don't know. Typically, I try not to read into things too much on social media. I mean, on anything like that. I try not to, whether you do or not. So that's the first thing is I think that one thing that I think people don't realize is how much of an influence they can be in crypto when they enter. So Mike Novogratz came in as the face of hedge funds, as our gladiator that is going to go out and bring institutional money in. And the same way Giancarlo and the CFTC is like, hey, this is our guy now. He's going to help us with regulation or whatever. And I think that a guy like Mike Novogratz, he kind of knew that he was going to get some attention, but I don't think he quite understood that how many people would make decisions based on like the slightest thing. I mean, I can't tell you guys, I'm not trying to like talk about myself or anything, but people email me and comment and tweet all the time. They're like, dude, your body language kind of changed when you talked about this. Like, did you really mean something differently than what you said? I can kind of feel. And it's like, whoa, like what? And like they'll change their entire portfolio strategy. And so I'm saying a guy like Mike Novogratz has massive, massive influence. Same thing happened with Charlie Lee. Same thing happened with Vitalik, where they underestimate how much of an influence they can have. So when he tweeted that, my personal opinion, I haven't talked to him, I don't know, I haven't confirmed with anybody about this. I bet that he was just trying to say, look, there's going to be regulation. Don't worry about it. We're still going to crush it. But when he wrote that, he probably got like 100 comments or people emailing him being like, what's the regulation? What's going to happen? Are we screwed? Should I sell my stuff? Oh my God. CNBC started doing a headline. I mean, And so I think that's probably why he deleted it, because unfortunately in crypto, you can't talk about bad news. If I tweeted right now, hey, we're in a, like this bull trend doesn't look too good. That's not what I believe, right? I'm not saying that that's the truth. But if I tweeted that as a joke or whatever, it would not go over well. Sarcasm and anything bad does not go over well in crypto. The stakes are way too high for people because like this represents way more than money to most people. And that's an unfortunate thing because in traditional finance, you talk to somebody who owns a hedge fund or a private equity fund, they want to be proven wrong. They want to know what they're missing, like, what the reality is. In crypto, it's the opposite. In crypto, people want to hear how good it's going to be later on. And I'm optimistic about it all, but you got to be selective on what you can be public about saying, right? No one's holding anything back. It's just like how you look at everything, right? What you choose to discuss. Let's see here. All right. Can you give us your 3 tokens out of the top 50? Sure. I mean, it's nothing new, guys. I mean, I think that let's just go through it right now. I'll tell you what I like. Again, not investment advice. This should not be considered. You should go out and buy this. I own all these coins too. I think Ethereum is interesting. I'm not going to do three. I'm just going to do a bunch of them. I think Ethereum is interesting because it's a protocol, and a protocol seems to be doing really well and seems to be getting a lot of momentum out here. So I like Ethereum. I like Litecoin because I like how much movement they're making. I like the brand of Litecoin. I think that people assume Litecoin is just a fast currency type of coin. And that brand, that story is super powerful. The tech is good. Charlie's smart. The foundation is smart. They're working on some cool stuff. So I like Litecoin. Stellar, obviously, I'm a huge fan. Neo, I like for a variety of reasons. One, because China just tends to go insular and somebody wins big. Neo seems to be in a really good position for that. Monero, obviously, I like. Privacy is just probably the most underrated part of blockchain right now. Without question. So Monero is the most private coin, and it's big. It's got a great team behind it. So I like Monero a lot. Let's see here. VeChain and Icon. I've looked into these, and I'm fascinated with them. I'm a little concerned at how they went so big so fast. That's a little concerning. Without the history to a certain extent, but I could be completely wrong on this. It might just be that I have not researched it, but that's why I haven't really gone big on either of those. OMG, I like a lot. I think it's great. Big fan. Maker, I bought some Maker. That Maker could end up being a complete failure. It's a stable coin, or it's collateralized debt platform for a stable coin, which is DAI, DAI. If you don't know what that means, it's basically trying to replace Tether. And so Maker, if this works, will be really interesting because there's only 1 million of them. But if it doesn't, it's going to go to zero pretty fast. Augur is interesting. I wouldn't be surprised if Augur was one of the big stories of 2018, 2019. 0x I like. And that's really the top 50. So we'll stick there. But those are the ones. I mean, I own all those. Again, I think that there's still room for unbelievable growth in these top coins. It's just a matter of which ones are going to survive. And that's what I'm focused on most. And then, like we were talking about earlier in the live stream, for anything else, you get down to the top 100, top 200 ICOs, you wait for the deals to come in. You wait for any of these tokens to get either on the chart or the market serves it up for you, or there's a huge dump on it or something. And that's when you start to get into those tokens. But for the most part, I'm just starting to look at coins that I think are going to be around for a long time and could attract a lot of money. All right, let's see here. Trezor or Ledger? I like Trezor personally, and buy it from the Trezor store. You could just, protect yourself. That's what I would say. All right. Andy asks, I love the weekend vids. Andy, thanks for watching. Appreciate it. What signals do you look for in terms of confirmation to enter a long position? Do dollar cost average when entering? Great question. So typically, so if you look at something like Bitcoin, which really mirrors virtually all the other coins at this, loosely speaking. If I'm going to enter a long position, I've done a lot of the research already, and I'm just waiting. And so the confirmation I look for is usually the volume spiking to as the highest we can get, and then making a move, right? So this volume looks a little wacky. Sometimes TradingView has been giving me all sorts of weird indicators recently. So this is the true volume. And you see, this is actually one of the highest volume days ever. So that's why this shows pretty good support. But Andy, to answer your question, I really try to focus on 3 to 5 coins at a time that I really have a long-term investment thesis around. And then I just wait for dips to deploy more capital And then I'll dollar cost average, just kind of loosely speaking, to build those positions over the long term. And the reason why I haven't really been talking about buying stuff in this down cycle is because this is not confirmed, in my opinion. I mean, you can even go to the weekly chart and you look at this, and once the weekly candle closes, this weekly candle closes, and we start a new one, that could signal a reversal or not. And so if you ever want to get confirmation on a reversal, you look at the volume, and then you look at the longest time frame you possibly can, because that's going to give you the longer the time frame, the stronger the signal, as opposed to going into like the 5 minute or whatever. So do your research. It's really just, you have it all set up. You wait for the dips to deploy more capital, and then you dollar cost average regularly on the coins that you believe in to build out your portfolio. Make sure that it's all, you have the long-term plays, you've got the YOLO plays, and maybe one or two in the middle, but that's what I do. All right. Are you skeptical about leaving fiat on exchanges? Yeah, I mean, for the most part, but I think with things like, the big ones in the US, right? Gemini, Coinbase, those are probably the two most legit. Those have all the same insurance policies as your online bank. So as much as you are okay leaving cash in your online bank, relatively speaking, that's how much FDIC and insurance that Gemini and Coinbase have. Now, that's not to say you couldn't get yourself in trouble if you don't have two-factor authentication and very complex passwords, and you're doing all the infosec that you need to be doing. But for the most part, it really just comes down to the point of entry being difficult to get into. So I don't know. I'm always a firm believer where I think security is number one, and then everything else follows. But whatever's the most secure place to keep your fiat, that's where you should keep it. My opinion, right? Obviously. Let's see here. How is it possible to put buy orders if you don't keep fiat on exchanges? Well, that comes down to the risk, right? So as you get close to your buy levels, you can move money in, and if you can wire money in, and it'll be there in a couple hours, give or take. But like the thing is, there's just a trade-off. There always is a trade-off. Security, speed. I mean, that's like that's the ultimate trade-off in anything in life to a certain extent. And so if you want to be able to capitalize on some immediate dump, and that's your strategy, then yeah, you're going to play a riskier game and keep fiat on the exchanges so that you can potentially capitalize on that. If you're playing the long game, you should be able to say, oh, look, these prices are relatively low. I can move it in. A day later, I've gotten I can still buy it. The price I need to buy, you can be a little bit more slow about it, but you can be more secure. And so the short answer is there is no, immediate solution until custodial services and gets built out, true exchanges. All right. If there's potential bull run this year, could you expect it during the same time frame as last year, early November to late December? I have no idea. It's really going to come down to the sentiment. And here's the best thing that you can use to gauge the next bull run is, when do people that are not in crypto already or have heard about crypto, they don't own crypto yet, when those people start texting you again and emailing you and saying like, hey, I think I should get into this Bitcoin thing or whatever. As soon as you start getting those calls again, that's when it's going to start to go, it's going to start to, this thing is going to start to reverse. Of course, that's not a promise, but this is all driven by demand. It's all driven by a combination of speculation, storytelling, investment to a certain extent, because there's enough there to like justify it at this point. But it's people believing that this is a thing. And right now, a lot of people know it's a thing, but not a lot of people believe it enough to buy it. And as soon as people start coming over that fence, which is going to be a combination of reading headlines like Arizona's letting you pay in taxes, or hey, regulations are going to allow it to be a lot safer, or Vanguard's going to start off. I mean, there's a million things, right? ETFs. But the more the people who know about it start to believe and buy it, could that happen in a month? Sure. Could it happen in 9 months? Yes. I personally don't know. I just listen to what people are doing. I watch what people are doing. And, usually you can see that all in the charts. So, all right, here. I'm going to be stoked if it drops that yellow line. I'll be impressed. I think it's bittersweet, right? I think one thing I've found in crypto, but just in general, in like almost anything, but really in crypto, is that often people they want to be right more than they want to make money. And so if it drops here, I can get some really good deals and it'd be awesome, and buy a bunch of whatever coins. But that still means that like we're having a huge retracement. And while that may be healthy long term, it means that we've got a long way to go before maybe that comes out of that. So it's bittersweet. And I couldn't care less about being right. Or I couldn't care less about people being like, oh, sick call, that was awesome. All I care about is that I'm in a position when I am right, that I can capitalize on it from a market standpoint. And I want the same thing for everybody. But that's just like a funny psychological thing. Naval Ravikant tweets about this a lot. I love his thinking on this, about how wealth and status are really the two byproducts of any market, or any wealth transfer in a market. And so many people focus on the status and they confuse it for wealth. And they think that they don't want other people to do well because it means that they're right. And, it's just I don't know, whatever. All right, let's see here. Do a couple more of these, and then maybe we'll wrap it up. It's just great chatting with you guys. I'm stoked that you guys just hang out, ask questions. Hopefully I can help you out as much as I want. Thoughts on ZCL and Bitcoin Private. So it's Z Classic and Bitcoin Private. Another lame fork. I don't know enough about that to give you a really good answer. That's the truth. I think that guy Rhett, he's the developer down in Austin. I've heard, it seems like a smart guy. I don't know. I don't own any Z Classic. From a trading standpoint, there's a lot of game theory that you could play on that chart. But I don't know. I could see it going either way. So, yeah. Let's see here. How do you address how Binance would be adversely affected in the event that Tether fails? Well, I think it would affect everybody. It would affect all the exchanges. It would affect the whole just credibility of the crypto markets for a variety of reasons. But I don't know. I think I might be in the more of a majority. I'm not convinced that it's going to fail. Don't quote me on that. And I do not have any insider info by any means of anything that has to do with Twitter, or Tether. But it just, I can see it getting replaced before I see it failing. I see something else coming in, and whether it be regular fiat, whether it be some other stable coin, but I'm just not convinced that we're going to wake up and there's going to be a headline that says Twitter indicted for 94 counts of fraud with the dudes in handcuffs and all the exchanges crash. I just don't think that's going to happen. Now, if it did happen, it would suck. There's no question about that. But I've just so many people that are really smart and that I've talked to the Tether people, I've met with them. They're all saying that they don't think it's going to collapse. So I don't know. It's a tough one. Who knows? All right, let's see here. Is Zcoin a good long-term investment? None of this is investment advice. I do not know, and I mean, I wish I could tell you, but let me be clear here. Anybody who tells you something in crypto is like an awesome long-term investment without qualifying themselves by saying like, it could go to zero or something, they are really messing. That's really crossing the line. So I try to be honest about everything. I am honest about everything. I don't know. It could. I think the team's great. I think the product's great. They're developing a lot of stuff. Like the masternodes is a solid, like they're doing a lot of great stuff. So from a privacy standpoint, I think it's just like, it's as good as many coins. And they do have a great team. They have a great community. They have a great support team. So that's what I would say. All right, let's see here. Let's see. All right. Well, we're getting to that part. We're getting to that time of the call where we just start throwing coins out. So we all know what to do now. Thank you guys for joining me today. It's always a pleasure. Make sure you hit the subscribe button if you're not already. Share this with a friend. Tell them to subscribe. Going to take this channel. We're going to try to get it to the next level. Go parabolic on the subscribers. But I appreciate you guys coming out on a Sunday, taking the time. And I will see you all tomorrow. All right, guys. Peace out. Have a great day.